Hey, today we are going to look at what is a loan estimate. Here at Munshi Capital, we are striving to get you the best loan terms, and many times the borrowers identify saying they are getting a better interest rate or a lower monthly payment, but they don't really get an accurate loan estimate from the lender. And the loan estimate is a document that gives you very detailed insight into all the details of a loan. I don't think it's an easy to read document even after doing these so many times, multiple times a day. There is so much detail into a loan. So without any further delay, let's see what is a loan estimate and what is it that you are actually buying in for the real estate, as well as in terms of the loan, right? The details of the loan. A loan estimate is a document that is has to be provided to you within 3 days after you complete a complete loan application. The way to compare a loan estimate between two lenders is it has to be created at the same time from the same date, right? So a loan estimate from Monday could be different with that same lender with a loan estimate from Wednesday. Or if you're comparing it between two different lenders, then if the date is different, the time is different, then the estimates are going to be different, right? So it's important to compare loan estimates that were somewhat at a similar time frame between two lenders to get an accurate number of what is the actual cost of doing the loan. There are two important documents, a loan estimate and a closing disclosure. I'm going to create a separate video of what is a closing disclosure, but a loan estimate is sent to you at early stages of a loan, and it gives you a high level quote of what the loan is going to cost you. Let's look at all the page one, which has a lot of details, very, very important details. Page two has a lot more clarifications of the numbers that are on page one. And page three is kind of reality checking what are you getting into. So let's look at page one. Uh, this is the date when it was issued, this loan estimate. This is a hypothetical situation. I just found a property on MLS. I have no detailed understanding of what this property is, if it's worth it, is it not worth it. I do not know this borrower. I do not know anything about this transaction. I just found some information online, so I'm just using that to give you a more accurate real world possible scenario. Borrower is me, so I don't know him. I really don't know myself as well either. So uh, this purchase price, I picked up the listing price of 2298. The terms of the loan is a 30-year loan. It's a purchase transaction. Let's say it's a 10-year interest only loan. Uh, and it's a fixed rate. So the interest rate is not going to change throughout the term of the loan. And in an arm, that interest rate will change. This is a conventional loan, not a FHA or VA. The rate lock is important because this interest rate, let's say this was created on Friday, the September 12th. By Monday, this could be a different, even if the lender doesn't, is charging the same fees and same terms, this interest rate could be different if the market scenario varies, right? So unless you get a locked loan estimate, it's not confirmed. Uh, Most lenders will not lock the rate till the time you are sure that you are proceeding with that lender. So it's okay to get an unlocked loan estimate just to kind of get a initial quote. And once you confirm that it's good, you sign the initial disclosures. At that stage, we go ahead and generally lock the rate. Sometimes we start a loan, and if we are thinking the market is going to get better next week, we start the entire loan process and we wait for a few days. Everything in the loan can continue even without the loan being locked. So if we go ahead, let's look at the loan amount. In this case, it's 20% of the purchase price. The interest rate is just a number. It does have a significant impact to the loan, but I will show you some detailed insights on this, how in just a little bit of how this number may not have as much meaning that most people expect it to have. Okay, so in this case, I've put a 7.5 interest rate. It's a jumbo loan, 20% down. The monthly principal and interest is 11,489. So you some some lenders, if they don't have the best interest, they will set up the loan in the way I have set it up. This is not uh, a recommended loan option, mainly because if we look at the details, the year 1 to 10 is interest only. Year 11 to 30 is going to make payments towards the principal. So for the first 10 years, none of your loan is really being paid. Even though you're making $14,000 a month of payment, it's all just cost. So you can get a lower rate, uh, but is this the best option really for you? For 10 years, none of your loan is being paid really. It's just expense, $14,000 a month expense. You might as well just rent a house somewhere if that's the case. A prepayment penalty is a no on this. A balloon payment is a no. I will have separate videos explaining these details. What's a prepayment penalty and what's a balloon. Uh, Also, there is a HOA of $200 a month that is paid directly to the HOA. So that's in addition to this payment. So if you observe, there is escrow payment of 2593, but a monthly estimated payment of 2793, and HOA is not included in this monthly payment. I've tried to incorporate as much as I could within this situation. Another thing to realize, even within the 10 years, the property insurance and property taxes can change. So this 2593 can change at like once a year. Generally in February they reevaluate this, and this number can change every year. Okay, so your monthly payment can go up or down. Generally it's in February that they reevaluate this. We are doing a 20% down loan, so that's about $460,000 in down payment. But in addition to that, there is $50,000 in closing costs, so you will need $510,000 to actually complete this purchase. Phew, that's a lot of money, right? For most people, that's a lot of money. If it's not for you, great, but it's a lot of money. It's a big decision. You're buying a home that you're going to be living in, so it's pretty important to get all these numbers right. Now, your question might be, what costs? Why is it $50,000? Why is it like, right? So, just as I mentioned, page one is a summary of everything, of all the details. Page two, you can dive in a little bit deeper to understand what is causing this $50,300 to come up, right? So 460 is the down payment. There is extra closing cost of 50,000. That's where the 510,000 comes up. Let's look at what are these costs. So this section of the loan estimate is divided into different sections. Section A, Section B, and Section J are the ones related to financing and lending. Right? In this case, the underwriting fee is 1195. These are all like other charges that are being paid for. These are like transactional charges that are being paid for the loan. And I selected a slightly higher interest rate, so the lender is giving 7,628 in lender credits. That's just these three sections are the ones that are related to financing. The other sections are things that you can shop for. You may opt for owner's title insurance. You may not opt for it. That could save or make you $3,000. I would always recommend getting it. Your $460,000 is worth having an insurance of $3,000. This is a one-time purchase. So, and if you remove this 3,000, then many times the lender's title insurance, where is that? This one. If you're trying to save this 3,000, this one could increase by 1,000 many times. So many times it's not worth skipping this at purchase, specifically when the down payment is such a big amount, right? And then I have these are Section E has all the government and transactional expenses. So there is transfer taxes. This amount depends on what you have negotiated with the seller in part of the purchase agreement. That could change. I have a separate video explaining prepaids and initial escrow payments. You are making a monthly payment towards property taxes and insurance, and you're making a one full payment of property insurance at closing, and you're also making another 4 months of property insurance payment for the escrow. Why are you paying this three times? Check out the other video that goes in detail why these expenses are kind of, it feels like you're paying it three times, but when you look at real numbers, you're only paying it once. Check out that other video if you have questions about why are you paying this twice or thrice. Okay, so that's how we come up with $50,000 in additional closing cost. So you will need $510,000 cash to close the purchase. A few more details about the loan details, and then just a reality check saying, are you really doing this, right? Just disclosing, saying this is the reality you are getting into. In the first 5 years of the loan, you would have paid $706,000 in interest, and you would have paid no principal payment. Most of the times, this is not the case. It will be a 30-year fix, so you would have paid some principal off in first 5 years. And the total interest you are paying through the life of the loan is 168% of the borrowed money of 1.8 million. So you're paying like closer to 2.5 million in just interest over the life of the loan. And a few more details about the loan. So hopefully this helps to understand how a loan works, what is a loan estimate, and how to read this very, very critical, important document. Thanks.